What's going on, everyone? It's your boy Kinti Traders. Hope you guys are all doing well. It's been a minute since I uploaded a YouTube video, and in today's video I'll be teaching you about identifying valid order blocks. But first thing first, the most important thing that you need to know or that you need to identify before attempting to analyze is the market structure. And as we all know that a market moves in three ways. It's either the market is moving in an uptrend, it's either the market is moving in a downtrend, or it's either the market is moving in a consolidation phase. So this is how the market moves in an uptrend. So in an uptrend, the market creates a higher lows and higher highs. And it is important for you to identify those highs and lows. Okay? So in this case, this is where our low is going to be. This is going to be our high. This is going to be our high low, our high, higher low, higher high, higher low, higher high, higher low, and higher high. Yeah. So after identifying our highs and lows, the second thing that you are going to identify here in this case is a break of market structure. Remember that you are trading using order blocks, and an order block is the last candlestick that was formed before an impulsive move that caused the break of market structure. Yeah? So in this case, our break of market structure is going to be here. This is going to be our BOS. So if you are having a BOS here, it means that our order block is going to be where? Our order block is going to be here, which is the last bearish candlestick that was formed here after this impulsive move that caused the break of market structure. You see, the market came and mitigated our order block and the market pushed up. As the market continues moving up, it creates another BOS. It takes out this previous higher high and creates a new higher high here. Ne? Same procedure. We are going to take our order block here. This is going to be our order block, which is the last bearish candlestick. The market came, mitigated our order block, and pushed up. We are going to have a break of market structure again. And our order block in this case is going to be where? Here. It's the last bearish candlestick. The market came and mitigated our order block and pushed up. So this is an uptrend. Obviously, and for a downtrend is going to be exactly the opposite of what was happening in an uptrend. But in a downtrend, you need to know that a market is forming this is our high, this is our low, this is our lower high, this is our lower low, this is our lower high, this is our lower low, this is our lower high, lower low, and lower highs. Okay? After identify your lows and highs, the second thing is to identify your break of market structure. In this case, our break of market structure is going to happen here at our lower lows. You see, the market took out this previous lower low and created a new lower low here. Ne? So this is our break of market structure. Then our order block in this case is going to be what? The last bullish candlestick that was formed here before this impulsive move that caused a break of market structure. The market came and mitigated our order block and the market dropped. As the market was dropping, it created another break of market structure, leaving a unmitigated order block here, which is the last bullish candlestick. The market came and mitigated our order block. If it happens that the market is going to continue moving in a downtrend, we are going to follow the trend by identifying a break of market structure, then order block. Now, let's go to the charts. So first of all, I'll start with the bigger time frame because that's where we are identifying the overall trend of a market. So this is gold, and gold here is my favorite pair, and I will be in this video I'll be analyzing this pair, gold. So this is gold on 4-hour time frame. Ne? In this case, I want us to focus on this trend. You see, from this low, from this high up to this low, gold was moving in a downtrend. And obviously, the second thing that we can do is to identify our highs and lows. So since we are moving in a downtrend, it means that gold is going to create a gold is going to form lower highs and lower lows. So in this case, this is going to be our high. We're going to have our high here. We're going to have our low. We're going to have high, high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Ne? See? We are having a lower low, lower high, lower low, lower high, lower low, lower high, lower low. Lower high and the lower low. So simply what is happening here is that in a downtrend, the market creates lower highs and lower lows. Our lower highs are here. These are our lower highs, and these are our lower lows, where a break of market structure is going to happen at our lower lows below. Then our lower highs, that's why we are going to identify our order blocks or our point of interest. Ne? Now, if you can focus, put our focus here. Ne? If you can put our focus here, remember that in our mind we already know that a gold is moving in a downtrend. So I'm just gonna pick a certain portion. That's why I'm gonna analyze, because obviously I know that gold is in a downtrend, so I'm looking for selling opportunities. The second thing that I'm gonna identify in this case is a break of market structure. This is going to be our BOS, and this is going to be our break of market structure. And before choosing our order block, there are certain things or there are certain confluences that you are looking at, so that when you choose our order block, you choose our order block in a safest area that won't be manipulated by a price. First thing that we should look at before choosing an order block is an imbalance. This is our imbalance here. This is going to be our imbalance. This is going to be our imbalance. So since we are having an imbalance here, it means that we need to choose an order block above this imbalance, so that by the point when the market goes to mitigate our order block, it also fills this imbalance. So we need to choose a order block above this imbalance, and in this case we are having a clear order block, which is the last bullish candlestick here. This is our order block. This is going to be our order block. See, the market came and mitigated our order block, and the market dropped. So you see, we had a break of market structure, we had an imbalance, and we had our order block, which is the last bullish candlestick that was formed before this impulsive move that created BOS. Now, remember that you are moving in a 4-hour time frame. I want us to put our focus on this trend. Also, this is a clear downtrend, but I want us to drop to a 1-hour time frame. One most important thing is that you need to be flexible with time frames. There's no specific time frame that you need that I can recommend to you, like to look for a setup at. Like all of this setup, you need to check. Like all of this time frame, you need to check them. You need to check all time frames. Now let's go to 1 hour. Let's go to 1 hour. Let's check 1 hour time frame. In 1 hour time frame, we are having this. We are moving in a downtrend. So obviously, before analyzing, I'm gonna mark our highs and lows. Since we are moving in a downtrend, obviously the market is creating lower highs and lower lows. This is our lower high. This is our lower low. Lower high, lower low, lower high, lower low, lower high. From here, I'm going to identify my break of market structure. This is going to be my BOS. Break of structure. From this break of structure, there's what we call a failure swing. A failure swing simply as a confluence in a trend. Since we are moving in a downtrend, the market failed to take out this previous lower high. Rather, it created another lower high. So in this case, it shows that our lower highs are able to hold a price. Now it confirms that we are in a clear downtrend. Then after identify a failure swing, I'm gonna look for an imbalance, but I don't have any imbalance here. I have a trend line liquidity, a small liquidity here. Does need to be taken out. Obviously I will have to look for an order block above this liquidity, which is going to be my last bullish candlestick. This one is going to be my order block. You see, the market came and mitigated our order block and our market dropped. Obviously, if we took a trade here, our stop loss is going to be above this order block. Then if we take profit, our take profit is going to be where? Our take profit is going to be on our next low. This is our next low, and as you can see, the market came and hit our take profit. Now let's go back to 4-hour time frame, because already the market hit our target. Now we need to look for trend again. Okay, sharp. Previously on our left side, the market was moving in a downtrend. This was a clear downtrend. Now we can see that the market is starting to change a trend or a direction. The market is now moving in a bullish trend. So there's what we call a change of character. Change of character simply happens when there's a change in trend. Now what is happening with the change of character is that, let me remove all the analysis. For a change of character to happen, there needs to be a break of market structure and an order block. And at that area, if an order block is not able to hold a price, then a price violates our order block. That's why we are going to have a change of character like this. Okay, let's assume that previously market was moving in a downtrend like this, created lower highs and lower lows. Then we had this, another break of structure, then this, then the market do this, then this, and then this. So as you can see that we had a break of market structure here. After break of market structure, we had our order block here. This was our order block, and our order block in this case was our last bullish candlestick. Then the market dropped. After the market dropped, it created another BOS, or break of market structure here. This is a break of market structure. From this break of market structure, our order block was supposed to be here, the last bullish candlestick here. But in this case, look at what happened. The market violated that order block. So we are going to have a change of character here. We are going to have a change of character here. This is going to be our change of character. This is our change of character. And previously here we had a break of market structure. We had a BOS. Now we are starting to look for buying opportunities, and it means that I have to look for my order blocks here. The last bearish candlestick, the market came and mitigated my order block and pushed up. Now I need to have a confirmation that indeed the market has changed a trend. So I need to have a break of market structure again. This is going to be my BOS after change of character. So with this BOS is going to be a confirmation of a changing trend. Now I'm gonna mark my order block here, and then I'll wait for the market to come and mitigate my buy order block. I'm going to wait for the market to come and play out the return to order block move. Then the market taps in my order block and pushes up. Now we are having a clear change of trend. Let's go to the chart. Previously our market was moving in a downtrend. As you can see here, the market was selling. Then the market started to do what? The market started to buy. The market started to buy. Obviously, for me to have a change of character, I need to have a break of market structure first. This is my BOS. This is going to be my BOS. Break of structure. From break of structure, I'm gonna have my order block. I mean change of character here. This is going to be my change of character. Change of character. Change of character. Now I'm gonna pick my order block where? Here. This is going to be my order block. See, the market came and mitigated my order block and pushed up, but I need to have a confirmation that I will use to enter on this for our order block. Now I will have to jump to 1 hour time frame. I will have to jump to 1 hour time frame. Let's go back to our analysis. This is our 1 hour time frame. So obviously in 1 hour time frame, I will have to look for a change of character, another change of character setup that I will use as a confirmation for entry. Previously here, this move that mitigated my 4-hour OB created a BOS. Then after this break of market structure, our market created what? Change of character here. Now we are having a confirmation. Or so in this case, my order block is going to be where? Here. This is where my order block is going to be. And I will use this 1 hour order block as my confirmation to enter this long buy. See, after the market mitigated this order block, the market pushed up. Again, if you are confused on the entry model that you can use to enter this setup, this is what you call a 3D. 3D is simply a trend line that is moving towards an order block. So as you can see, you can use this trend line, three drive trend line. So how do we use a 3D? As the market touches this trend line within an order block, that's where we're gonna execute our buy position. So this is what is going to happen here. As the market touches a 3D or a trend line within an order block, I'm gonna enter my buy. Then if I enter buy here, I'm gonna put my stop loss below that 4-hour order block. Then for a take profit, I will use a 4-hour take profit, since this is a swing trade. Since this is a long setup. So for take profit, this is going to be my take profit, my next high. See, the market pushed up and reached our take profit. Now we are confident to say that gold is moving in an uptrend. So what we are going to do is that we are going to follow a trend. You need to identify a break of market structure. You need to look for an order block. In this case again, from here, after the market reached our take profit, I can see that our market created a break of market structure here. From this break of market structure, obviously our order block was supposed to be what? Our order block was supposed to be this last bearish candlestick, this nice candlestick. But look at what happened. The market didn't come to mitigate this order block. So what is happening here in this case is that if the market leaves an order block, we just move with the trend. We just follow the trend. Now I will jump to 1 hour time frame. Let's go to 1 hour time frame. Let's check 1 hour. From 1 hour time frame, since the market failed to come to this order block, so this is what you call a failure to return, a point whereby the market fails to come and mitigate a like fresh order block. We call it a failure to return. Then we'll have to move with the market. After this break of market structure, the market created another break of market structure here, because it took out that previous low, higher low, higher high. This is our break of structure. This is our break of market structure. So from this break of structure, let me mark our BOS. Let me mark our BOS. Break of structure. From this BOS, we are going to have our order block. This is going to be our order block. This is our order block. As you can see, the market came and mitigated our order block and pushed up. And for entry, a model that we could have used on this setup, still I can see that the market used a 3D. Again, you know that, as you all know, 3D is a trend line that is moving towards an order block. So what is happening is that when the market touches this trend line, that's when you're going to execute your buy position. Then you put your stop loss below your order block, and your take profit should be your next high. This is our take profit. See, the market moved up and reached our take profit. Let me remove this. Now I want us to focus on this trend, the trend that formed after the mitigation of 1 hour order block. You can see that the market was moving in a clear uptrend. Again, the market created a nice higher lows and higher highs. This was our higher low, higher high, higher low, high high. Obviously, if you are having this kind of structure, we can come up with a setup. In this case, we had a break of market structure here. We had a break of market structure. From this BOS, Obviously our order block, since we are moving in an uptrend, is going to be what? The last bearish candlestick. This is going to be our order block. See, the market came and mitigated our order block and the market pushed up. For this one, since this order block is I can say it's a refined order block. The entry type that you can use here, you can just enter aggressively, or you can use 50% of an order block. Since this order block is small, né? Like you can enter aggressively. So if you enter here at the opening of your OB, then put your stop loss below your order block, then you can use this as your take profit or next high, or you can just target this high. As you can see, the market moved up and reached our take profit. See, now let's go back to 4-hour time frame. 4-hour time frame. Still, you need to follow a trend. Okay, the market created a break of market structure here. After this mitigation of an order block, the market created a break of market structure here. But for this break of market structure, our order block was supposed to be what? Our order block was supposed to be this candlestick. This was supposed to be order block, this last bearish candlestick. But also the market failed to come and mitigate that order block. So what we are going to do is that we are going to focus on another break of market structure. This is our second BOS. Then let's see what is happening from here. Let me mark our BOS. This is our break of market structure. Then from this break of market structure, obviously our order block is supposed to be what? The last bearish candlestick. Then let's see what happened. Let's see if the market came. Okay, in this case, the market came and mitigated this order block. You understand? But for this one, again, I want us to focus on this trend, because obviously the market was moving an uptrend up until it dropped through this order block. I will have to go to 1-hour time frame. Let's check 1-hour time frame. For this 1-hour time frame, I want us to focus on this trend. That was formed before a market went to mitigate that long buy order block. You can see a very nice setup here. You can see the market was moving in an uptrend. Obviously, we had a break of market structure. This was our BOS. From this BOS, break of structure, this is our break of market structure. From this break of market structure, obviously our order block is going to be where? Then I can see that we are having a failure swing here. Then our order block is going to be here. Our last bearish candlestick. This is our order block. And as you can see, the market came and mitigated our order block, and the market pushed up. So obviously, if you enter here, you can use the opening of an order block, then you put your stop loss just below your order block. The take profit is supposed to be your next high. This is our next high, and as you can see, the market reached our take profit before it sold. Now let's go back to 4-hour time frame. Okay, immediately after the market reached our take profit, it started to sell. So obviously the market started to move in a downtrend. That was our downtrend. So from this downtrend, what is happening is that you can see that our market was creating a nice lower highs and lower lows. This was our previous low, and we had a lower high here. And I will take this as a break of market structure. So from this break of market structure, obviously my order block was supposed to be this last bullish candlestick. But look at what happened. The market just reacted on this order block, and later the market violated that order block. So I'm gonna take this as a change of character. This is my change of character. So after a change of character, I'm going to have my order block here, which is the last bearish candlestick. And as you can see, after the market mitigated this order block, if you are going to enter our trade here using this setup, Let me just use the open of this order block. Our take profit is supposed to be what? Our take profit in this case is supposed to be our next high. So this is our next high, and as you can see, the market pushed up and reached our take profit. Still, let's see what is happening. Okay, after the market reached our take profit, the market created our another high here, of which it was taken out by this move. So I'm going to take this as a break of market structure. So after this BOS, so I'm going to have this. I have a trendline liquidity grab, but obviously I have a trendline liquidity sweep. Block was supposed to be where? This was supposed to be my order block. This is my order block. And as you can see, the market came and reacted on this order block, and then later it volated on that order block. It happens. So if this happened now, it clearly shows that now gold is moving in a downtrend. I will have to change a trend now. Since the market volated my long buy setup, I will start to look for selling opportunities. In this case, I didn't have a nice structure. That is why I didn't have a change of character setup. But I'll just focus on the current structure here that happened after this evolution of this long buy setup. So I'll take this as my BOS, since already the market was moving in a downtrend towards this order block. So this is going to be my break of structure. Then after this break of market structure, my order block in this case is going to be this candlestick. Remember that there is what we call a refinement of an order block. Obviously, if you go to any smaller time frame, you can refine this order block. Again, let's go to 30 minutes so that you can have a nice refined order block. That will be able is going to be easy for us to use in terms of entry type. So in this case, I'm going to use this order block, this 30 minutes order block. This is going to be my order block, this last bullish candlestick here. See, the market came and mitigated my order block. After then, obviously, for an entry type that you could have used in this case, I used 3D because this setup happened on the, I think it was a June CPI, I mean June NFP. So this was our entry type. We used a 3 drive entry, stop loss above my order block, then a take profit supposed to be on our next high. This is our next high. So see, the market pushed it down and hit our take profit. Still on this move after mitigation of that 30 minutes order block, the market was moving in a downtrend. Obviously, we can come up with scaling in opportunities. We had a break of market structure, break of minor structure. Let me mark this as a minor BOS. So obviously, minor after this minor BOS, the move that created this BOS started here. So I can see a very nice QML here that gave me a confidence that indeed there's an order block above that week on that week. So QML, this QML, then I'm gonna take my order block here. This week is my order block. Obviously, if I have a QML, I'm sorted because it's the one that I'm gonna use it for entry. So after this, if I'm gonna use this take a QML as my entry type, then stop loss above this QML, then my take profit is going to be on my next low. See, the market came and hit my take profit. Now, still I want us to focus on this move that was formed after the mitigation of that 30 minutes order block. You can see that gold was moving a downtrend. Now let's go to 15 minutes and see if we can come up with another scaling in opportunities. So obviously the market was moving in a downtrend. So here a break of market structure here. After this break of market structure, we are having a clear order block here, which is the last bullish candlestick. See, as you can see, the market came and mitigated our order block. Then obviously we're going to take our entry here at the open of this order block, stop loss above this OB, then take profit supposed to be on our next low. See, the market hit our take profit. Now let's go back to 1 hour time frame. Still we need to follow a trend. Let me remove this. Market created another break of structure here. After this BOS, obviously the market left our order block here. This is our order block. Then for entry type, we have used the opening of this order block as our entry. Target here, stop loss above our order block. Then the market reached our take profit. Now, after this, okay, the market was moving in a downtrend again. Then we had another BOS here. From this BOS, our order block obviously was supposed to be on this week, which is we need the last bullish candlestick in this case. The market came and reacted on this order block. So the market reacted on this order block and dropped. So again, this move that went, this RTO move shows that the market was moving in an uptrend. So we are going to have a change of character here since we had a break of market structure previously. So this is going to be our BOS again. BOS. From this BOS, we are going to have a change of character. Change of character. From this change of character, let me remove this order block. My order block is going to be this one. I'm going to have a filler swing here. This is my filler swing. Obviously, I'm having a imbalance here. This is my imbalance. Obviously, I need to choose my order block below this imbalance. So this is going to be my order block. The last bearish candlestick. As you can see, the market came and mitigated my order block. After that, as you can see, market mitigated my order block. Stop loss below, then take profit. Our take profit in this case supposed to be here. Oh, this is supposed to be our take profit. This next high. As you can see, the market mitigated our order block and put up and reached our take profit. After the market hit our take profit, still create another break of market structure. This is a break of structure. This is our break of structure. Then obviously after this break of market structure, you're going to have our order block here, which is the last bearish candlestick. Again, we're having an inducement liquidity here. An inducement simply means a move that was supposed to mitigate our order block, but that move didn't mitigate a order block, just moved few pips away as it was about to mitigate our order block. So below this low or below this week, there's a liquidity, so we call it an inducement. So right now in this case, this is my focused on gold on the current price, and I'm looking for a buying opportunities here. And for entry model that I can use in this case, I can see a very nice 3D. So yeah guys, that's all for today's video, and this is how we are killing gold using a smart money concept strategy. So if you need any assistance, guys, I'm offering mentorship. If you want to learn more deep concept about this strategy, you can WhatsApp me on +267 7471 2839 +267 7471 2839. Check my Facebook page, Kinty Traders. Check my Instagram page, Kinty Traders. Follow me, guys. Thank you, guys. Until we meet again on the next video. Don't forget to subscribe, share, and comment on this video. Thanks, guys.